that in case there is a new promoter, distinctly new promoter brought in, not part of the same group, but somebody new, then banks could get some more time to complete the project with a new promoter that will put some of these projects which are stuck back on their feet. Now, if there are reasons beyond control, such as the unavailability of inputs and so on, that's a different situation. The other big sort of development on the restructuring is that banks can take equity positions up to the 30% stake. So a couple of banks can gain control if they decide to convert, or if there's a convertibility clause. Alternatively, in restructurings, they can embed a convertibility clause, and that will allow them to take control in case the restructuring doesn't pan out as promised. So this will allow a more effective transfer in case there's a need for a change in management. The SEBI and RBI are discussing the details of the conversion, the price at which it will convert, etc. SEBI, of course, is interested in protecting the rights of minority shareholders, and RBI is interested in making sure the banks don't convert at too high a price given the fair value. And so that discussion is coming to some agreement, and we will see in the next few, as I said, within a short while, it happen.
Can we go out and check if there are questions, Shaima?
Sure. Participants connected to the audio call, if you wish to ask a question, please press star and 1 on your touchtone telephone. We have the first question from the line of Kate Bradshaw from New York Times. Please go ahead.
Hello, Governor Rajan. I wanted to come back to the question of how you are assessing changes in the fiscal space. As you're looking to the budget, are you mostly interested in what the initial year deficit as a percentage of GDP is likely to be, or are you more interested in what the structural changes are on the longer term in terms of what the deficits are likely to be?
I think both. I think the finance minister, as well as all the ministry officials, have reiterated their desire to stick to the budgetary target for this year. But also, there is a lot of anticipation about the the fiscal path over the next few years. It's not that we're locked into a specific number or a specific path, but it's the overall package, whether it makes for serious high-quality fiscal consolidation over time that clearly will impact the inflationary forces that we are most worried about. So it's all aspects of the budget that we will be looking at and that are eagerly awaited. I think the government has the intent of producing a solid budget.
Thank you.
Thank you, Shaima. Gabriel?
Hello, Governor. Can you hear me? Yeah. Gabriele Parosini from the Wall Street Journal. You have voiced concern today about the spillover of competitive quantitative easing, which is something that you've been doing for quite some time now. I would like to know if you think that India is now in a better position than it was last year or even in 2013 to cope with this coming new wave of quantitative easing that started in Europe. And also, I would like to know if you think that the markets have already priced in completely the coming tightening cycle of the Federal Reserve.
First, I'm not sure that we know fully the process the Federal Reserve will follow. It will depend to some extent on developments on the dimensions that you talked about. As you know, the Federal Reserve introduced a phrase on the international situation in its statement this time. So I have no doubt that the exports as well as the path of the dollar will play some role in their future deliberations. As far as India's position goes, we have made important strides on at least three out of 4 macro variables, and I'm hopeful that the fourth we will also move. The 3 on growth, we never plunged as low as some of our comparator countries. Of course, if we take the new statistics at face value, we're already up to 6.9. I don't want to overemphasize that because we need to understand that, but that is one of the highest growth rates in the world. If we stick with our projection of 5.5, we're still doing pretty well for this year. The second element that has improved considerably is our current account deficit, which we project to be 1.3% this year and perhaps even lower next year because of the lower oil price, so long as it stays low. The third element has been inflation. After all, investors are worried about the value of the rupee. That has come down considerably. The inflation has come down, which is one of the reasons the rupee has remained so stable. The fourth element is the fiscal deficit. We have made some strides there, some important strides, and this is where the budget will be an important factor in establishing the continued confidence that our macro actions are all in the right direction. A secondary aspect which is important to help us is the buildup of reserves. Our reserves are substantially higher, even net of forward positions, which today are positive rather than negative last year. And therefore, I think we are in a much better position. Will we be immune from volatility? And the answer is no. I think everybody is affected by volatility. But after the first wave of volatility, when market participants stop to think, I'm hopeful that we will look much better than perhaps comparator countries.
One last question from Anita.
So, power producers have been complaining that once the banks categorize an account as NPA or bad, they do not give any further credit. But in case you see that there's a possibility of that account reviving, would you see any merit in banks considering giving them more money for possible revival in future?
I think we should not attribute stigma to an NPA, and this is a misconception that is both amongst producers as well as lenders. The producers think if their account is labeled NPA, it means they're at fault. It just means that the account is not paying, and there could be very legitimate reasons why it's not paying, because of policy inaction, because of complications, legal complications, etc. An account could stop paying, or changes in world prices. So the fact that an account is an NPA is an accounting statement. It's not a statement about blame or reputation, etc. That's number one. Second, even an account which is an NPA, banks can lend to it. And in fact, the new loans, so long as they're being serviced, and there could be a moratorium on those new loans also, that loan is not considered an NPA. Our regulations do not label it an NPA. So projects that are halted because they're NPA can be restarted with new loans from the banks. There is nothing that prohibits that. What is important is the banks make a calculation that these new loans are necessary to restart the project, and the package is going to be NPV positive for the bank because it's already made loans which are in trouble. The project needs to go forward to pay off. Here's a little more to ensure working capital needs are met or the final construction phase is done. That's okay. And that's important actually at this time, that in such situations they take a considered decision. I'm not going to micromanage the decision from here, but I'm going to say if those loans are made, they are perfectly appropriate and they will not be considered NPA. In fact, the rules say until fresh loans into an NPA situation are not necessarily NPAs so long as they're performing.
First deadline for classification of restructuring accounts into NPAs. That's a request from the bankers.
Well, I have said repeatedly that it's important we clean up bank balance sheets, that we show the balance sheets what they actually contain, that will enhance confidence in the bank balance sheets and enable the banks to raise the much needed fresh capital. In order to build confidence in bank balance sheets, we have to come to an end of forbearance, that we have to put banks on the right track. We've given enormous amounts of new flexibility in trying to put distressed projects back on track. But I don't think the answer is to pretend and extend or extend and pretend. It is to call a spade, do what is needed, including making new loans if necessary to complete the project, but move on beyond that.
Can I squeeze in a question on financial
Well,
stability?
thank you very much from
I
our
have to
side
actually
this time.
catch a plane, so
Yes.
thank you very much.
Thank you, sir. Will you please let the executives go out of the room first? Thank you very much. Thank you.